morning and welcome to Indian Open right here on BloombergQuint Live. I'm Nilesh Shah and it promises to be an interesting morning of trade. Much better than what was the case yesterday. But I think a few people will argue that it is not as gung-ho as it was when Prime Minister Modi announced the stimulus yesterday in the announcement. So the SGX Nifty then was at levels substantially higher. From those levels, we've certainly cooled off, but the SGX currently indicating a start which is around 9,450 odd. So there is a 2.5% uptick that we're seeing from the levels of yesterday. Let's see how we open and let's see how we meander our way through that. I think we'll get in a battery of experts today throughout the show to try and tell you how you could approach. So I think to start off the show, and I think it's just great to have Mr. Nilesh Shah of Kotak AMC to talk about his thoughts. Mr. Shah, good morning. Thanks so much for taking the time out and speaking to us at BloombergQuint. What are your initial thoughts? Because as we digest the news and as I look at a bunch of notes that are coming in from economists, everybody seems to be suggesting that unless the details are out, it is difficult to figure out how big and how large an economy saving package this could be.
Obviously, Neeraj, the size is definitely above market expectation, but clearly quality of spending, out-of-box thinking on financing the deficit or the stimulus, and most importantly, flawless execution on ground will be watched by the market. Clearly, unlike developed world who have the luxury of spending money at will without impacting the rating or without facing barrage of questions from investors, as a developing country, we don't have that luxury. So we have to optimize every rupee of spending, and which is where quality of spending, designing funding of the stimulus, and flawless execution is equally critical.
Mr. Shah, what do you think is a better option? Again, the division seems to be that if it is on a stretched balance sheet, if it's a very large fiscal measure, then there could be repercussions on the currency, on ratings, etc., which in the long term is actually detrimental. And on the conversely, there are a lot of people who are arguing that unless that is done, the economy will not come out. What are your personal thoughts, Mr. Shah, about what is a better thing to do?
So there are some options which we have to consider. For example, on the trade side, we have lopsided account with China. Our trade deficit runs at about $60 billion with them. There are many items which we have to import. But if we can adopt Swadeshi and replace made in China goods by made in India goods, we can probably take out $20-30 billion from trade deficit with China. Gold import is our nemesis. On an average, $30-35 billion has been spent over last decade every year. If we can monetize existing gold reserves, existing gold owned by Indians in the country, to that extent we can save that bleeding, and that's substantial saving which goes out. Third, if we look at coal, despite having third or fourth highest reserves in the gold, depending upon whose third or fourth highest reserve in the world, depending upon whose estimate you take, we are still spending $21 billion on import of coal. By encouraging domestic mining, that spending can also be saved. Electronic imports at one point of time were likely to exceed oil imports. They were increasing at that pace. Fortunately, we have been able to reverse that by shifting many mobile manufacturers into India. But we should further expand local manufacturing base by inviting local as well as global companies to set up their base in India. And if we can reduce electronic imports, that also will help local economy. Two services where we have been big spender is travel and education. 22 million Indians go out, and while there are different numbers being estimated by various agencies, that's a substantial amount of money which is being wasted abroad. Local tourism over global tourism can again help us retain those money in India and create a multiplier effect. So by focusing on the trade side with China on gold import, coal import, travel spending, education spending, and electronic imports, we can make it better. We can retain money in India to improve our economy. Second thing is related to funding of stimulus. We know Indians are the largest owner of gold in the world. The amount could be anywhere between $1.5 trillion to $2 trillion. Unfortunately, most of it is in unaccounted format. If we can monetize that gold, then we don't really need global funding. It doesn't increase India's debt. We are using our debt assets for productive purpose. And that combination will be appreciated by investors as well as rating agencies. And without resorting to excessive borrowing, we will be able to fund the stimulus.
So you reckon that you would be happy if there are some innovative financing measures, but it's a larger fiscal powered stimulus announcement as well? Because I mean, you would be a better judge here, but I mean, the numbers keep on varying. A bunch of economists saying that it could largely be a monetary driven thing because 20 lakh crores is all inclusive.
We'll have to wait for the details, and different people have different opinion, undoubtedly. All I'm saying is that we have to adopt unconventional thinking in terms of spending, because unlike Western world, we don't have luxury of throwing money.
Got it.
For them, quantum is not a limitation. For us, we have to optimize every rupee of spending. Second, we have to fund it through innovative means. For example, monetizing gold could be one way to fund the stimulus without resorting to too much of fiscal borrowing or too much of foreign borrowing. So we have to optimize our resources, and for that, all unconventional as well as conventional means should be adopted.
Got it. Mr. Shah, one final question. Tactically, do you reckon, I mean, the markets are showing that bit of an uptick on open today, but tactically, do you reckon that this stimulus plus the world economy is opening up would mean that the markets possibly could head higher over the near term as opposed to head lower? Is it possible to even kind of predict that?
Neeraj, this is a perfect storm where medical crisis, economic crisis, and financial crisis is looming together. And unless until we have medical solution, it will be difficult to figure out how economy and markets can bottom out. Now, obviously, we have to live with the virus. We have to open our economy, and markets will be watching evolving scenario to take a call whether economy and virus both can coexist, or whether we need a medical solution for economy to return to normalcy.
Okay, I think that sums up for your thoughts. But Mr. Shah, thank you so much for taking the time out and speaking to us today. Appreciate your time. Well, that's Nilesh Shah of Kotak AMC. Well, from the same house, but a different team altogether. And Rasmi Koza Johnson needs no introduction, really. Joins us quite often, and always good having him. Rasmik, thanks so much for joining in, especially in a day like this. You reckon, Rasmik, that from the highs that we had opened today, which are a bit tempered compared to yesterday, you would be comfortable initiating or telling your clients to put in fresh money to work? Rasmik, can you hear me? Okay, I don't think we have Rasmik. We'll just try and repatch that line with Rasmik Oza in just moments from now. I urge my producers to tell me once Rasmik Oza is on air again. But because you have to be mindful of the fact that the SGX Nifty, as I said, is not as gangbusters as yesterday. Was up about 4.5%, 5%, whatever you have, or post the announcement yesterday. It's a bit more tempered, and the world markets are a bit more tempered. And as everybody said, as Nilesh Shah said today, as our Twitter timeline will tell you, almost everybody is saying that the devil could be in the detail, and therefore we need to watch out for what the composition of this would be. And therefore, Rasmik Oza, it's a tricky question. Good morning, always good having you, Neeraj here. It's a tricky question, but I'm asking you, to your large clients, would you be comfortable telling them to put fresh money to work post the small gap up that we'll have today?
Good morning, Neeraj. I think based on whatever we have, gone through this, we have still to wait for the integrity of the package, like similar to budget, need to just wait for the fine print. But based on pure, business valuations and earnings and everything, I think the upside in market is capped at around 10,000 from a Nifty level. So, the upside risk-reward ratio is not very attractive. In fact, actually, if Nifty goes above 9,500, it could be a good level to, start maybe taking off some money and maybe converting into a little bit of cash, and then wait for the clarity to emerge going forward, because the downside could be much more than the upside. And anyways, we have seen global stimuluses also, but then after a week of those events, again, markets go back to basics of earnings and valuation. As of now, for me, the MSCI World Index and the S&P 500, internationally, they are trading at almost 15, 20-year high valuations. So there is a big threat of some form of correction and derating happening globally. In that context, I think so. Indian markets will are also susceptible to any correction globally. So keeping this in mind, I think so. Maybe above 9,500, we will not be, very seemingly coming and recommending a buy on a lot of stocks in the market. One needs to be a little selective. I think there is some strength emerging in few sectors like automobiles, metals. I think that too, and maybe a decline in pharmaceuticals. So these are some of the pockets where we are more comfortable at this juncture.
Okay. So keep that in mind. Rasmik doesn't believe the risk was in favor. Rasmik, what did you make of, let's talk about some of the bigger newsmakers, right? The pharma space is in focus. Jubilant Life saying that they have entered into an agreement with Gilead. I think Cipla has done this. I think 3 or 4 companies have done this. Do you think this, I think I heard you mention healthcare. What do you think of these pacts that a Jubilant Life or a Cipla have signed with Gilead for remdesivir or otherwise?
It's a good move. It's very positive for all these companies. I think worldwide they've tied up with only 5 companies, out of which 3 are Indian companies, and these companies will be supplying this medicine to almost 127 countries. So it's a good development for all these companies. We don't have Jubilant under coverage, but from prima facie, whatever numbers I have looked at, it's a good company available at a very low valuations. So there is a decent room for upside in that stock, given the kind of business model they have. It's a huge, almost 8,000-9,000 crore revenue company. So it's material for these kind of events have a material impact on the bottom line of the companies like Jubilant. Cipla also, I think so, a good development, because in the last 2 months, if you see the developments that have come up in Cipla, almost on all angles, they look quite positive. So we have a positive view on Cipla, I think so. So both Cipla, Jubilant look quite good. The third company, Hetero, we don't have a detailed understanding of that company, so I'll refrain from commenting on that stock. But nonetheless, this could be a little maybe stopgap arrangement, at least for next maybe 6 months, 9 months, 12 months. We don't know till the time a proper vaccine comes in. Till the time we don't have a good vaccine, this medicine could be a key driver for these companies for the near term.
Okay. Now, viewers, remember, we'll talk about the short squeeze related impact with Chandan and Gaurav beside moments from now. Before that, something that is independent of this announcements from the Prime Minister Modi, and that is Vedanta. Anil Agarwal plans to take the company private. The board will meet on May 18th to consider the offer. Nikki Johnson now for more on the story. Nikki, what's the promoter Vedanta Resources offering to any minority shareholder of Vedanta?
Well, not a good deal, very raw deal, I would say. But then I'm going to give the details first. Where VRL, Vedanta Resources Limited, they plan to delist the company and from BSE NSE. It's going to be holding on a meeting on May 18th. And what they propose to buy is a 48.9% stake, which is held by the company at a price of around 87.5 per share. Now, this particular price is at a discount of more than 2% as compared to the previous market price that we have seen. So this one is an interesting one. What it has to shell out in order to buy this complete stake would be a sum of around 16,200 odd crore. Including this includes the ADRs, and because of which you're looking at the amount of around 16,200 crore, without which it's going to be a 14,000 crore odd kind of figure. If you look at the rationale which the company has laid out, it said that this is only the next logical step in simplification of the group structure, and this will lead to an enhanced financial and operational flexibility of the company. Talking about the cash and books for Vedanta as a whole right now, as per the December shareholding pattern, that stands around 12,200 crore. Post dividend, Neeraj, the announcement came in last night where 16.5 per share of dividend will be given by Hindustan Zinc. Bear in mind the fact that, Vedanta holds roughly around 64 to 65% in this counter, and account of which you have a money of around 4,525 crore translating into the books. With this, they will have a number of 16,789 crore. I'm not sure if they'd be able to tap the Hindustan Zinc cash as well, which stands to around 22,000 crore, because there'll be a lot of fine details involved, paying out of minority shareholders to an extent of 35 to 40%. So that is completely complicated right now. But what brokerages right now make out of it, they expect the reverse book building derived price to be higher than the offer price. This price at this point of time, a lot of minority shareholders had a lot of issue around this price, but it's only the indicated price. Once the maximum bids come in at the price which is the highest, that will be the bid that will be considered, and promoters will have a right to accept it or give a counter offer in 2 days. If and when that stands corrected and accepted by 90% of the public shareholders, the deal will go through. If not, it's again a hit to the minority shareholders.
Okay, Nikki, I'll leave it at that. Thanks much for taking the time out and giving us those updates. Rasmik, a quick thought here. Vedanta delisting came as a bit of a surprise to everybody. Any thoughts here? What does it mean for a minority shareholder?
It's good for minority shareholders because there is a deep discount to the intrinsic value. So our target price on the stock is 110. So this shows that the stock was quite undervalued. This props up the little bit of re-rating in the stock, which helps both the minority shareholders also. And the dividend yield on the stock is pretty high. It offers almost around more than 10% dividend yield for shareholders also. But just to keep in mind, this delisting is not completely guaranteed, as the other anchors, other person said that. I think there's a lot of debt maturing in Vedanta Resources also. So we need to take a look at Vedanta Resources balance sheet also. It's got almost $7 billion of debt, and roughly around $1.9 or $2 billion of debt is coming for maturity. And the annual dividend income for Vedanta Resources is around $500 million from Vedanta. That's the only subsidiary which it has. So only thing one needs to keep in mind is that FY21 numbers are going to be a little bad. So the dividend deal probably could be good for FY20 number. FY21 is going to go down. Somewhere also we need to see whether minority shareholders approve, because there's a lot of leakage. 50% holding is promoters, so balance 39% is owned by FIIs, mutual funds and financial institutions. So unless they approve it, it's difficult for this to go through, because we need a 2:1 vote from the minority shareholders in the special resolution for delisting. Right. So it's going to be a little long process. We'll have to wait and see.
Okay. Rasmik, stay on. So much more to talk about. Try to focus a bit on trade. We'll also get in Saurabh Mukherjea in moments from now. But first, to Chandan Tapare and Gaurav Vissa, two men very important for today's trade perspective. Gentlemen, both of you, good morning. Thanks for joining in. Chandan, you've largely been bullish. We'll start off about 2.5% higher. Do you reckon there could be more upsides, or would you maybe book profits if you had long positions?
See, I think, however, we are consolidating a range, and important part is bonds are being sold. So I'll closely watch at 9,500 zone. That is 300 points from the previous day closing. So if it manages to surpass 9,500 zone, then only the long we could continue. Otherwise, suggestion would be reduce the positions, because upside is kept and the call writing is clearly visible in the market. So 9450, 9,500 is the make or break level. If market manages to hold beyond the same in the opening tick, then I'll continue with trailing stop loss. Otherwise, would suggest to liquidate the long position in the markets.
Okay, but I'm guessing no fresh longs. That's a simple answer. Gaurav Vissa, what would your theory be? I mean, what can somebody do to either existing or new positions? Quick thoughts.
Good morning. See, the whole idea behind any positive or negative news, if it's a positive news, it should result in index jumping above the resistance mark, which is in this case 9,600. Had this been formed when it was around 9,400, it would have been even better, because then there would have been a sentimental change. It is still below the resistance level of 9,600. So in my opinion, on the opening take, I would not recommend anything. But yes, if in first 15 minutes, if the lows are broken of that 15-minute candle, then it's better to book out the positions, whatever you have bought earlier. If not, then you can have that 15-minute candle low as a trailing stop loss, and you can try to ride the trend. But for now, fresh longs, I would be avoiding.
Avoiding fresh longs are our experts. Okay, so in light of that, then what about specific stocks? Chandan, I was looking at the trading desk advice from Motilal Oswal stable. I don't know if you initiated it or somebody else, but maybe there could be some short covering in some financials. Would you be playing for that? The HDFC banks, IDFC First Bank, etc.
Yes, short covering could be there in the built-in name because most of these stocks have seen the significant short built-up. So we believe that counters like HDFC or Bajaj Finance or such kind of stock can see the short covering activity. Mainly if you talk about the Bajaj Finance, the structure was weak, but stock was finding multiple support near to 1950 zone. And now the way stock opens positive, a short covering can be seen towards 2400 levels. But for trading point of view, by looking for 1 or 2 days with more stability and the better risk reward ratio and momentum, we are suggesting two trading ideas that is not from banking and the NBFC, but from the insurance and the telecom. So first trade will be buy on Bharti Airtel. We believe that this stock is all set to move on higher side. It is given a major consolidation breakout. Price setup suggests the stock is all set for 600 zone. We have seen built up of long position with put writing activity, and the entire sector is doing well, including momentum in Idea, Reliance from the lower levels. So recommending to buy on Bharti Airtel with a stop loss of 545 and expecting it to move to a 600 level. And second trade, that is buy on HDFC Life. This stock has given a consolidation breakout on the lower time frame as well as the daily and the weekly scale, given the breakout from its triangle formation. So here also expecting move towards 555. One can buy with a stop loss of 510 levels.
Gaurav, what about you?
See, it's going to be difficult to trade in the beginning for the reason that even though the stocks that I and Chandan might like, we might not get the stocks at the same price. But ICICI Bank, as we were talking about financials, there can be some short covering in the name. On the point and figure charts, there was a breakout in the futures because it's a super pattern. It can go towards 330 at 340, keep a stop loss of 320. That is looking quite interesting. Adani Enterprise is another name that is also being a good breakout. One can play for 146 to 148, stop loss of 137, and there will be one cash item that would not in the cash item, but one can buy in cash. That would be Mindtree. It garners attention for the reason that we have seen a breakout consolidation again on the verge of a breakout. So if we give a close above 920 today, we can have a move towards 1,050, 1,100 in coming days.
Viewers, I still urge. Maybe the markets are not as gung-ho right now, even in for a short-term perspective, yes, because the details are not known. I think if the details promise towards the necessary moves that the market wants, then maybe there could be some more upsides from these 9450 levels as well. So I'm guessing that some bit of this clarity would come in post the finance minister speaks today. Today, I believe latter half of the day is when she'll speak. So maybe some clarity would come in post that. Keep in mind the overarching view though, that what Rasmik was talking about, that the valuations are not in India's favor. So this may give a spurt, which is necessary to help the economy, but we are not in really great shape. None of the world economies are, and therefore you have to question in light of the valuations, whether you can make a fresh investment decision or not. But that is for if the markets were to head much higher. For now, for the near term, I think a lot of it would depend on what the finance minister says. We should get Saurabh Mukherjea in moments from now to talk about all of this as well. But just one quick perspective, since we're talking about valuations, Rasmik, we have seen what happens to HUL if the numbers disappoint. My question is, can the converse happen to Nestle because the numbers looked so good? It is a very expensive stock. Can it do more?
So the way we are looking at Nestle is, in cases where the valuations are very rich and extremely on the higher side, using DCF as a better way to look at companies in terms of, their ability to deliver returns over a longer period of time. Based on DCF valuation also, our target is coming to around 16,000. We're not seeing much upside in the stock from here on a price to earnings trades at around 73 times on FY21 number. Though within the consumer company pack, I think Nestle has been delivering great numbers. Last quarter numbers were also very good. Going forward also, we're expecting, earnings to grow at around 16-17% CAGR for the next 2 years. Nestle is one company where I think so, as and when there is corrections in the stock, that could give a better entry level for long-term investors in the company over there. I think so. Most of the consumer companies, one thing to note over here is, most of the companies' PBT has been flattish for March quarter, thanks to the sharp cut in taxation that's giving a lot of earnings growth in March quarter. So that's one thing to just keep in mind.
Okay, and we'll talk about actually that point, Rasmik, in the pre-open session. But quick perspective from Saurabh Mukherjea also warranted. I think he has an appointment at 9, so we need to thank him before that. Pre-open session will anyways begin. Then let's get him on air right now to give us quick perspectives out here. Saurabh, thanks so much for taking the time out and speaking to us. We're still awaiting details, but what's your initial reaction to what was announced yesterday?
I think more than the quantum of the package, which does sound surprisingly large, although I suspect the details might be suggestive of the fact that the RBI's monetary stimulus, which is I think around 4% of GDP, maybe that's flattering the size of the package. But more than the size of the package, what I think is very interesting is the mention of bold economic reforms, mention of labor reform, land reform, liquidity, and therefore my reckoning is what we'll hear from today onwards is that not only are they going to give tax breaks, not only will there be cheap money on offer, but I also think land will be on offer. Perhaps free land or subsidized land will be on offer. And that I think is the most potent stimulus here. It's very rare to see the government of India making land available for industrial use. And if we do see that, then I think both FDI and domestic capex will benefit from that. It is relatively clear from this whole focus on self-reliance that there will be focus on medical equipment, on defense equipment, on electricals and electronics, potentially on light industrial manufacturing more generally, and that should be a tonic for many of these capex sensitive sectors. So we look forward to the details. But if genuinely there is land and labor reform on the anvil, I think that's far more exciting than the quantum of the package itself.
Well, that's an interesting thought, Saurabh. I would reckon that you yourself would probably agree that this is slightly long-term in nature. In the near term, even if that comes about and it's as exciting as, and I'm hoping more exciting than what you are penciling in right now, hoping for right now, do you think the valuations are a bit of a deterrent, keeping in mind what the world is going through as well? From an investor perspective?
Yes, as I've said several times before in our country, the bulk of the Nifty has a more fundamental challenge than coronavirus, and I don't think the bulk of the Nifty's challenges can be addressed really. The bulk of the Nifty have business models which simply don't generate cash for decades on an end, and therefore I think valuation is a perpetual challenge for most Nifty stocks, but they simply don't have cash generative business models. But for well-run Indian companies, whether they be listed or unlisted, well-run Indian companies which provide essential products to Indians, whether they be transportation, FMCG, financial services, for well-run Indian companies who have cash flows, who have broadly robust business models, decent economic stimulus will get them back on their way. And given that this is a country where your average age of the population is 28, the world's youngest demographic ever, if you have a reasonably healthy demand impetus from the stimulus, fiscal and monetary combined, I think we should be all right from a macro perspective. As I've said before, I don't buy this nonsense that's being published by a whole host of multinational agencies plus brokerage economists back home about shrinking economy, busted government. It's all but obvious that if you have an economy shut down for 2 to 3 months of the year, you will have GDP growth moderated or negative. But that's not value-added analysis. The value-added analysis lies in understanding how does coronavirus reset the world. What is the implications for India of cheap oil, cheap money, and China's diminished status? My reckoning is that triple whammy is very powerful for India. China's diminished status, cheap oil, and cheap money. I think the doors open up for India to use its natural advantage in intellectual property, in bright young talent, and move into areas such as medical equipment, defense equipment, light industrial manufacturing more generally. And I suspect that's where the package will have an orientation around these sectors. And I also reckon in the next 2 weeks, we will see global majors making announcements allied to these packages. I think the government would have worked on that. There will be a slew of announcements over the next 2 to 3 weeks where global majors will make announcements allied to these packages. And let's hope that changes the course of our manufacturing sector.
That would be quite strong. Saurabh, thanks so much though. I would have loved to talk more because This is a very interesting conversation, but time doesn't permit it. Love to do a show a bit later on, Saurabh, on these thoughts.
Look forward to that. Thank you. Bye.
Yeah, look forward to that. Okay, 8:59. We're about a minute away. Viewers, keep in mind, we'll start off about 2.5%. So let's wait and watch. Maybe a battery of announcements that come in, if they come in over the course of the next few days. From the FM, they will come in. If indeed global announcements, investment announcements happen, and that's a sentiment booster, and that could actually be great. So let's wait and watch what happens. But the first rates on the pre-open session should be out anytime soon. The SGX Nifty is indicating a start about 2.5%. Let's wait and watch if we build on from there. As Gaurav and Chandan mentioned, we need to see if indeed we sustain 9,500 or maybe 9,600 during the course of the day. And I'll ask Gaurav Bissa about that. What if 9,600 gets achieved in 2 days' time? Then is that a positive? I think we'll talk about all of that. We'll talk to Rasmik as well about the outliers within that valuation discomfort that he has. But the first rates on the pre-open session, no, I don't think we'll have a 5% uptick on the Sensex is suggesting, but we'll have an uptick for sure. The key is we're looking out for greens on the screen. Cipla is looking robust, 10% higher. The pre-open session, I think on the announcement Gilead with Gilead, and I think Jubilant Life too would be showing that. IndianOpen Bank, lots of rumors about. Nippon Life interested, maybe that could be higher. Vedanta, the 10% uptick on Vedanta as well, which might well be a certainty because of what the GDR has done. But then look at the others. HDFC Bank is showing a robust take. Kotak Bank is showing a robust take. So the start is very, very positive. The question is, can we build on from there? Let's wait and watch. All the Nifty 50 stocks are in the green. It shouldn't surprise anybody. Dr. Reddy's is the least performing stock. And then the likes of Airtel, Sharetel, etc., Airtel, Infratel, etc. are okay. Nestle is looking like starting off higher. So these 3 or 4 names, you have to keep them in mind. Viewers, remember, just keep this in mind. There will be short covering in financials. So that is one bucket you need to watch out for. Pharma has some positive news, so Cipla, Jubilant Life, etc. are the other ones that you need to watch out for. And then you look at the bucket of stocks which have news independent of the package. So Nestle, good results. Airtel, Vodafone, Reliance, the telecom space is firmly in focus, so that is something you have to watch out for. And Vedanta, this delisting thing, is completely devoid of what the index will do because of the package announcement. But let's wait and watch if the Nifty settles down within the first few minutes, or does it stay higher? Actually, Gaurav, that was gonna be my question to you. We may not have a start above 9,600 today. Or what if we sustain 9,450, 9,500? And what if in the next 2 days post announcements, we move above 9,600? Would you believe that's a good time to initiate fresh stock calls or an index call?
I guess I would say definitely yes, for the reason as I always mentioned that having a spot of the moment is a different thing, but if you sustain that, we're talking about a couple of hours. Now, you were talked about a couple of days, that would even give more legs to the rally. Then we can think of Nifty index heading towards the 10,000 level as well, where we are seeing a psychological mark, some call reading happening at that level as well for the monthlies. So in my opinion, if we close about 9,400 today, and if we sustain about these levels, and if we cross indeed sustain about 9,600 as well, then yes, we will see a good amount of bounce back that can be seen in financials, as we discussed in the beginning of the segment. Also many of the other mid-cap names, Nifty index as well. So I think there can be a sectoral rally once it holds above the level of 9,600.
Yeah, I think that's the key. Now, Chandan, financials, I want to ask again. I don't know. As I said, maybe you were a part of that note, or this is coming from a different team. I don't know. But what I, of course, got was the possibilities of some short covering that we could see in some of the banking names or financials. And I want to ask you about 3 names particularly. One of them is Shriram Transport Finance. The other one is HDFC Bank. Actually, only 2 names. Chandan, sorry, Chandan, this question is for you.
Yeah, so replying to your question on Shriram Transport Finance, what we have noticed that the stock witnessing a range from last couple of weeks. However, the multiple hurdles are near to 800 zone, which is the 50-day exponential moving average. But I believe the way market opens positive, some sort of short covering cannot be ruled out. So I think the support for the counter will be near to 645. That is also the previous day low. And because of that, the stock is now again potential to move towards recent swing high of 800, 807 levels.
Okay. Sorry, I missed the HDFC Bank call, Chandan.
Yeah, so talking about HDFC Bank, however, we have seen breakdown in the counter from a small consolidation band. But the recovery was remarkable even on the last trading session. Technically, it formed a long leg dozy formations with higher volume, which indicates the declines were menaced to board. And stock again reclaimed the 900 zone after testing the 870. So I think the gap up opening could form a bullish island reversal pattern in the counter, and because of that, slowly we may head towards 950 to 980 levels.
Okay, now, I was writing a piece. I think I'll not have to write it, Rasmik, because I wrote a piece yesterday on the metal space, which yet to be published on my site. But the valuations closer to the GFC lows probably give a bit of a spurt any which ways. This upticks that we see in the metals, were you constructive? Are you bullish on any of the metal names? And despite the upticks today, would you recommend anything for our viewers that you are recommending to your clients?
Yeah, we're quite positive on the Hindalco because especially Novel is doing far better than what is anticipated, because in the developed markets, the demand for canned products is going up, and Novel stands to gain on that front a lot. And anyways, there has been enough, demand impact going forward as global economies recover, I think so. And if automobile productions and so on and so forth, they come back slowly and gradually, demand for most of the metals will also come back, and stocks have been beaten down disproportionately. So in many of the companies, the upsides look pretty high. Even if we go 20-30% to that, somewhere in between also, you'll see a decent uptick in most of the names. Preferred pick is Hindalco mainly, and maybe followed by Vedanta as a second name over there, because of the delisting angle over there.
Okay, the other stock that is doing well in the last few days and seeing some traction is Zee Entertainment. Gaurav, I don't usually like talking about Zee, but I think the last 2 days has shown some resilience. Have you seen that on the charts and the derivative positions as well?
Well, if you see Zee Enterprises, I think we had spoken of this earlier as well. As long as it's trading below the levels of 160, I'll be still cautious. If we indeed see the stock holding above the levels of 160, one can keep a stop loss of 153, 154, and on the upside levels of around 175 is what I would be expecting. So yes, there is some action. I'm not seeing too much of aggressive positions being built in derivatives, but yes, if you look at the charts, above 160 is what I would expect that some spark to come in the name.
Okay, mind you viewers, all financials will probably do well because the index is itself showing a start which is likely to be above 9620. The SGX Nifty was deceptive, or maybe this will change very, very quickly. I don't know, but the 6 minutes are showing a start in or around 9600, which is actually not a bad thing. My question is, and therefore, that we've asked Chandan at length about what some of the financials could do. Mind you, the likes of BOB, IDFC First Bank, etc. was so badly beaten down that there could be some upsides there. The stronger one, and that is Bajaj Finance. Chandan Taparia, what's your thought here?
Yeah, already we discussed about the Bajaj Finance, and we were talking that stock was under pressure, but we were witnessing sustained buying interest near to 1950-2000 zone. And I think the way stock will open here positive, may see the short covering momentum and can head towards 10 to 15% on the higher side. So I think the 1950-2000 base, which has been making from last 4 to 5 weeks, is going to work as a short-term bottom. And because of that, some short covering may be seen, which may take it to 2400 to 2500 levels in the counter.
Okay, just before I get to Rasmik on a fundamental call, manufacturing and whether he spots any opportunities there. One call really, I'm just trying to look at the Nifty 50 stocks again, because viewers, it might be better to stick to the larger ones when it comes to a trade perspective. Rasmik said that he's reasonably bullish about Nestle fundamentally because the PE multiple might be a wrong way to look at it. My question is, technically on the derivative side, what is Nestle showing? 17,750 is where the pre-open rates are settling down. Gaurav Bissa, any thoughts here?
Well, if you look at Nestle, we have seen good positions being built earlier on, but in last few days, again, there might be some spike, but I did not see anything noticeable. Also, if you look at the charts, then 18,000 is a critical level. It might open a couple of percentage points higher, but as long as it's trading below 18,000, I would still be a little bit skeptical. Once it trades above levels of 18,000, sustains those levels, then levels of 19,000 can be seen in the Ziffy. Till then does not happen, I would still be a little bit, I'll really wait and watch from here by only about levels of 18,000.
Okay, mind you, but the pre-open rate's still okay, but some of the stocks have cooled off for sure. So the high beta names, Bajaj Finance, ICICI, IndusInd Bank are doing okay, but Kotak and HDFC not so much. So you have to bear that in mind as well. Let's wait and watch how the short squeeze shapes up on some of these names. It'll be interesting to monitor that. But Airtel too, very, very marginal gains out there. Some strength in the likes of Asian Paints today, so 3.5% higher too. Rasmik, just before we get to all you need to know, one final question, and that is manufacturing. There's so much of impetus laid out there. Within that manufacturing bucket, which is the best business according to you? Valuations is one thing, but which business do you think is poised if indeed manufacturing comes back in a big way?
Manufacturing, you have to go back to hardcore manufacturing activities, basically, which means like automobiles, textiles, I think so 2, specialty chemicals 3, and some bit of CRAMS kind of a model for pharmaceutical companies. These are some of the places where actually activity could pick up if more investments in FDI comes into the country. So that's the way I'm looking at it. But only a small caveat over here, one needs to monitor is recently when the irony is that when industries and factories are reopening now, most of the laborers actually are going back to their hometown, which is not a good sign. So if they're going back right now, when will they come? How many will come back? We need to ascertain that, because even if factories restart and manufacturing picks up, if you don't have proper labor availability, it could lead to some bit of distortion, and companies may not be able to run at optimum utilization, especially not the big companies I'm saying, but because 80 to 90% of employment in the country is done by SMEs and MSMEs, and their labor availability could be a little bit of a question mark going forward. But hardcore manufacturing, as I said, most of the industry should again come back into form once we restart activity in a normal phase in the next couple of months.
Gentlemen, stay on. Lots more to talk about. Viewers, I know I've been able to take some of your queries, but I'll try and take them in just a bit if we can. But first, let's tell our viewers all that they need to know to stay ahead in trade today, since we are minutes away from market open. First, government announces the 20 lakh crore economic package to make India self-reliant in the wake of the COVID-19 outbreak. Billionaire Anil Agarwal wants to take Vedanta private. The board will take up the matter on May 18th. MSCI adds Biocon, IGL, Jubilant Foodworks, Tata Consumer and Torrent Pharma in its India index. Ashok Leyland, M&M Financial, Shriram Transport and Tata Power will be removed from May 29th. Nestle India reports a 10.8% growth in the quarter ended March. Popular brands like Nestle and Maggi outperformed. No such luck for consumer firms like Blue Star and Havells India, with their revenue falling 19 to 20% in the last quarter. Cipla and Jubilant Life have entered into a licensing agreement with Gilead Sciences to manufacture Remdesivir. And Maruti Suzuki and Kotak Mahindra Bank are the nifty companies declaring results today. Remember, Dr. Reddy's doesn't come out with its numbers. But there's also Bloomberg news on Kotak Bank that the fundraising from Kotak, which I would presume would be some bit of share sale, could happen in the month of June itself. So that's not too far away. But I can't ask Rasmik about that. But yeah, do watch out. Pharma is looking rock solid. Cipla is up 5.5%, 600 rupees. By the way, some manufacturing names, and GMM Pfaudler is up at 3,700. This is a mid-sized name, not very liquid, but extremely buoyant right now. So do watch out for that one. And Asian Paints is bouncing back 3.5% today at 1579 for that counter. So do watch out for that one as well. Okay, final thoughts. Rasmik, 1 minute answer. We are very close to market open. One idea. I know you are skeptical on the valuations, but I'm sure there's a business that you like. One top idea.
See, insurance is something we're liking, and within insurance, I think Max Financial is a dark horse. That company trades at very cheap valuation. It trades at just 1.6 times EV to embedded value. And most of the parameters we monitor in insurance, like, return on embedded value, value of new margin business, it ticks on almost all the parameters at par with most of its peers. So there is a little bit undervaluation over there, which will get captured. And this agreement with Axis Bank, clears the air going forward, because Axis Bank used to contribute 55% to Max business. Now going forward, if 70% is owned by Max Financial and 30% by Axis, that could lead to a business uptick also going forward. So Max Financial looks quite good. We have a target of 550. maybe if going forward as business picks up, it could be upgraded also going forward. So Max Life is one stock we are quite positive.
Okay, Rasmik, we'll leave it at that. Thanks much for taking the time out and giving us your thoughts. I appreciate your time. Stay safe. Got top calls. Gaurav Bisa, to you, 10 seconds. Your top call for the day today.
I would look at Adani Enterprise because it is something that has not moved as much as probably ICICI Bank has moved. So for me, it would be Adani Enterprise. If it sustains the level of 142, one can use stop loss of 140, 141, play for 152 now.
Okay, Chandan, your top call. Quick.
Yeah, I'll be with Bharti and HDFC Life, and talking about Bharti, we are looking for 600 kind of levels.
Okay, so Bharti and Chandan is extremely convinced. Remember, Chandan's call on IGL was just fabulous, and the stock has done remarkably well. Gentlemen, just stay on if you can. Just taking one opening thought from you. Or actually, Chandan, Gaurav, we'll let you go. It's a big day of trade. Thanks so much for joining in today and giving us your thoughts. Please enjoy your trades. But the market's about to kickstart trade, and well, we're starting off well. About 9552. Actually, no, we've just come off a little bit from the highs of the day, but still doing okay. 9543. Vedanta 10% higher. Bajaj Finance 7.5. ICICI, IndusInd, Maruti, Axis, Tata Motors. That's the list of names. HDFC Bank is doing okay, by the way, but not as great, but still about 5.5%. Kotak Bank 4.5%. So those are the names that are doing well. Nestle, well, a muted, not a big reaction. Actually, is the worst performing index stock. Adani Ports actually is the worst performing. Nestle 7,500. Infosys marginally higher. Nestle is in the red, by the way, so keep that at the back of your mind. So those are a few names that you have to monitor in the session today. HUL too marginally soft in trade. So, well, buy the rumor, sell the news, I guess, when it comes to Nestle India. Not that the buying the rumor also helped. So that's the part one. Now, on to some broader market names, and let's see what's happening to some of those in the session today. Today is the day for high beta, and therefore you should be monitoring those set of names. So, Bajaj Finance 6% higher, 2196. Bharti Airtel just a muted gain, by the way. Keep in mind there is some strength in ONGC, just marginally higher, Zee marginally higher. So yeah, the gains aren't as great as in a lot of stocks that people would have thought. What about the broader end of the spectrum? Let's see the non-Nifty names, because the Nifty is completely cooled off. Vodafone Idea just about 5% higher, BEML 11 or 12%, Vedanta still higher, Hathway, ICICI Bank, DB Corp are some of the other names that you monitor. Shriram Transport 6% higher. So those are a few names that you monitor. You have to now, viewers, set yourself up for what could happen next. What's happened is happened. What could happen next is the key question that you have to monitor now. Well, let's get in a big market voice, Andrew Holland, and we'll keep on marking the markets as well today. But Andrew Holland Johnson right now needs no introduction, really, amongst the largest AIFs operating in the country. Andrew, good having you. Thanks for joining in. I'm guessing you two are awaiting the details, but just the base announcement, what does this mean for markets and sentiment?
Well, it's been a long wait, and hopefully it's been worth the wait. Obviously, the headline figures are fantastic. Devil's in the details, but whichever way I look at it, if it achieves some of the short-term liquidity measures for small and medium-sized businesses in terms of working capital, that's what we've been worried about. Ever since this virus outbreak happened. And if they can put some more money into the pockets of the poor and migrants, I think that would be what we'd be expecting at this point. How they're going to fund this and everything, we'll get to find out. But I suspect it's going to be more of a credit guarantee, which again is something that we've been saying that the government has to backstop these loans and working capital loans for businesses. So it will get us through the next 3 months. But, unfortunately, you saw from the figures yesterday in terms of IIP, the damage being done to the economy is very, very severe. So it will tide us through a working capital problem. But let's see what other measures they have in terms of reforms, because that would be the longer-term growth prospects, which I think the markets will be looking at now in more detail. So two things. One, where's the initial money going to in the very short term? How's it being funded? How's the deficit looking? And what are the measures being taken for the longer-term growth prospects of India?
Andrew, I think the valuation discomfort is there and the economy is not quite doing well is there. I think I had a guest just about 15 minutes earlier who mentioned that the sentiment might stay positive because of a spate of announcements that the government might do, which might be reformist in nature, maybe allowing some bit of land for industrial units to go and come and invest into India. Bloomberg has already reported a story about how, aside of land, there could be tax breaks that could be given in multiple ways for companies which are coming in if they promise to start operations in 2 years from now. And that might see very large ticket announcements from global manufacturing majors to come into India. Money is cheap. If land is available, if labor laws are okay, we might actually see those announcements happening. Is that positive for the market in the wake of the fact that valuations and earnings are deterrents?
Yeah, no, I mean it is. It's a very big positive, because one of the things that we've been talking about ever since Prime Minister Modi came back into power, and even with the trade problems between China and the US, is that this could continue to be India's moment, and if it can attract that foreign direct investment into India, it does a lot of things. Obviously, it kind of brings in money, but it also creates jobs and all the things that India's been trying to attract companies into India. The first stage of that would obviously the reduction in tax, which makes us one of the most competitive in Asia. So if they can pull this one off, then that would be really augur well, not just for the. I don't just think for the announcements, because obviously it takes time to build manufacturing plants, but obviously it would augur well for the longer term kind of growth prospects for India. And I think that would be something that the markets and foreign investors would like very much. My only hesitance here is that, I think a lot of countries will be looking to maybe bring manufacturing back home because of the supply chain problems which they've faced. And this might be, just a little bit of a dampener in terms of everyone rushing to do anything right at the moment, because companies globally are cash strapped as well. So just to move, your plant from China or your manufacturing from China to India is a cost, which maybe companies might not rush to do at the moment, but augurs well for the future. So it would be a great move, but I'm not sure it would have a flood of companies rushing in, apart from maybe some of those cash-rich companies in the tech space.
Andrew, did the mention, and again, we do not know how they will take shape and form, but a lot of things were mentioned yesterday in the speech about the land reforms, labor reforms, etc. And a lot of people said that could this be, people started comparing this to 1991, which I thought was a bit far-fetched unless the proof comes out. But I'm wondering, do any of the beleaguered pockets, which might find attention because they are naturally job creating in nature or are just strategic in nature, power and the reforms are there much awaited, so on and so forth, land, labor, and if manufacturing comes back in a big way, would you as investing or trying to invest into look at any of these, or would you wait for the print to come in? What's the need to preempt? Wait for the print and then buy? What would your approach be?
Yeah, listen, I'm going to obviously wait for the fine print, because that's the key. Now, listen, if the market market's up today, but if the fine print is still very positive, and you're seeing a longer term move, then to miss the first 3-4% is okay, because you're going to get a longer term kind of rally in markets going forward once we get through the COVID-19. So I don't think it's something that you need to kind of preempt at the moment. I would just wait for the fine print and then be able to look at which sectors, which companies would be the big beneficiaries of this, because at the moment we're all a little bit guessing of what could happen. A lot will also depend on how the RBI, kind of reacts in the marketplace in terms of OMOs. Are they going to monetize some of this deficit? So all of these things we have to kind of wait for the finance minister and the RBI to come through with more details.
Andrew, the overarching conversation is about the leaders of the past and the current and the new bull market, and financials obviously the favorite whipping boy. The weightage too has come off quite dramatically over the course of the last 9 to 12 odd months, if I'm not wrong. What is your thoughts on the blue chip names? Do you reckon that those two will fall out of favor, or within a larger bucket of NBFCs and banks coming off, the likes of the HDFC, Kotaks, maybe to an extent an Axis, throw in a Bajaj Finance after the rapport that you've seen, they will shine through? Do you reckon that could happen, or would you be underweight the space at large?
So we have been underweight the space, and it's a very simple logic in two respects. One is that the banking system is a warrant on your economic growth, right? And up until recently, we're looking at India and saying, can we get to be a $5 trillion economy? And you would say, well, in that case, you have to have larger banks and bigger banks, and that was the case for the banking system in terms of a sector to be buying and holding. But if you're seeing a contraction in GDP I've seen forecasts up to 5%, then your banking system's going to be rattled by that. And it's been the smaller and weaker banks which have been under a lot of pressure. And the moratorium that you're seeing, each bank announcing is anyway ranging from 30 to 70%, some of the NBFCs as well. And a lot of people are thinking it's not a moratorium, it's a free waiver because it's like a farm loan waiver. So there's going to be more NPLs, that's for sure. But let's see, if this package can alleviate some of that, and if that money is going into small and medium-sized businesses, whether you need another moratorium or they'll have the cash flow to get through the next 3 to 6 months. So I think, I think the jury's still out for the banking sector at the moment because we have to wait to see what those details are. And, it's not the fact that, the kind of the best in breed banks will not suffer, the ratings are high. They'll just be dragged down by the rest of the banking sector. I mean, you can buy SBI up until yesterday on a price to book of 0.3. So that's one of your largest banks in India. So you can see where valuations are. So obviously even the leading banks would have to have valuation cuts because they're not going to get that kind of growth, and they're going to be finding that there's going to be more incremental non-performing loans going forward because of the economic downturn that we're seeing.
Okay. Andrew, the other question that is a big thought process in the minds of people are the valuations at which some of the staple names are trading at, and we've seen chinks in the armor from a prime number like HUL as well. What are your thoughts here on this space? Could it see some de-rating, or would you reckon it will stay put?
So I think, again, it's kind of a little bit subjective because I'd like to see what that package is, so I'll be able to give you a better idea. But listen, if you go back to 2008, 2009, the two best performing sectors were FMCG and pharma. And then coming out of that in March 2019, the best performing sectors were financials, industrials, autos, and energy, right? So those are the kind of sectors you would expect to kind of do well when the economy is starting to improve again. So I think you'd have a shift from FMCG, but I think you're going to probably keep to those companies which are the more food-orientated companies, where we saw great results yesterday from Nestle. Those are continue to do well, to my mind. You might see a little bit of moving down in the value chain. Whether you are looking at buying detergents or anything else, maybe more branded products will be kind of scaled down in the very short term as people save a bit more money and spend it elsewhere. But for the farmer, I think there's a different story. I think there's a new evolving story for pharma, which I don't think is going to go away. And maybe for the first time, some of these first time in a long time, should I say, the generic companies may have some pricing power going forward. What's for sure is that we're all going to spend more money on health and health-related aspects of our lives going forward. That's without doubt. And I think the pharma industry has an extra leg, whereas maybe the valuations of some of the FMCG would probably be stretched at this point, and therefore I'd look to the other sectors which would I mentioned would be the beneficiaries of an economic rebound.
Andrew, just a thought on the larger package, just the last question on this conversation, and that is on the composition of what do you think should be the ideal composition? Because the street is divided upon whether there should be a larger fiscal measure which will revive the economy. But if that happens, then there could be a run on the money or on the rupee, and that might be negative for flows from a foreign investment perspective, etc., etc., etc. Or conversely, don't do that. So therefore, you stay within limits. But then the economic revival measure done only through the monetary side may not really result in too much, because right now fiscal measures are more important. Which side do you tilt in? Again, wear your hat of somebody who's investing from a foreign investor's perspective, because you kind of deal with that and you kind of like that in more fashion than one. What would your thought be?
Well, my thought would be it's all relative, and obviously in emerging markets, I could look at, say, Argentina, Brazil, Turkey, as and a lot of African countries as being having a lot more problems than India, even if it is taken through the fiscal. So I think it's something that I think worldwide countries are doing it. So I don't think India should be signaled out as being the worst or being downgraded just because of that. If it's being used for the right areas of growth going forward, then I don't see that being a problem. Yes, there might be a wobble in the currency because of worries about the potential downgrade. But to my mind, the fact is that when you started this conversation, you talked about the potential of foreign direct inflows, which obviously would be great news and would stabilize the currency, and then you'd get the foreign investors coming in as well. So I see it more as being the growth potential for India, not so much on the. I'd be looking through a rearview mirror if on the downgrade, if in the next 2 years you're seeing more foreign direct investment and FII buying into the markets here. So I wouldn't. I'm a little less worried about the rating agencies in the very short term, to my mind.
Okay, Andrew, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your thoughts. Appreciate your time.
Thank you.
Viewers, it's playing out as per script right now. It's about 2.5%, so 9,455. This is what was probably anticipated. Now the key is, what does the finance minister reveal, and therefore what happens then? Don't think of this as it's all priced in. If anything, this is probably the start uptick, and if the announcements are to the market's liking, then we may actually build on from here. So keep that at the back of your mind. The most awaited thing that the market wanted has come out. Does it have the firepower to drive the markets higher? Is the question. Some interesting thoughts and some varying thoughts expressed by experts today on the show. So you take all of that on board, make your own opinion, and then try and trade it. But as we wrap up the show, keep in mind the Nifty Bank is the principal driver, up about 5%, 19,810. Banks like HDFC Bank are driving it. ICICI Bank is up about 6.5%. And there is strength in Bajaj Finance, up about 5% from the financial space. So those are the banking names which are doing rather well for themselves. What is not doing well? Consumption in pharma. Reddy's is down, Nestle is down, Sun Pharma is down, Reliance is down another 0.25%. So that IT and the defensive pack is completely off favor right now. Right now the play is high beta, and maybe that's the nature of the market. Thanks so much for tuning in today to this leg of Indian Open.